Hey everyone, Coach Investor back to another video for today. So in today's video, let's discuss Intel and its current struggles. In a month from now, I believe they report earnings probably at the end of this month. And to be honest, I'm not that confident. I think with everything that's been happening this month with the company, I think with the overall semiconductor industry, I think the outlook that most companies gave us back in Q1 might maybe just meet or just miss, but I don't think everybody's gonna beat it again and again and again because we're in a different situation. Again, this might just be a short-term issue that remains to be seen and see the outlook if the outlook for the full year gets adjusted. But as for Intel, as you can see right here, free cash flow has gone down significantly since, well, its highs in June 2020, but still free cash flow in the last 12 months of close to $10 billion, return on equity of close to 27%. Gross profit margins we know was usually around the 60% or so. Right now we're trending down to around 50%, sitting in the last 12 months at 54.32. They do expect that to drop a little bit more because of all of their investments, but it should be trending up, well, in the next coming years as those investments mature. Now, as for the PE, you might say, interesting, it's now at 10.8. How is that even possible? Because, well, it was lower when the stock price was higher. Well, that's because this is the next 12 months, which anticipates earnings compression. And then the drawdown from its peak, it's down 46%. So for a company that barely grows year over year, well, double digits, let's say, it's down quite a lot. And that's because of that earnings compression, because of that increased investment, and obviously because AMD has been taking market share from them. Now, with regards to the outlook for Q2, so they expect revenue of $18 billion. That's down 3% year over year. Gross margin down 8.8 percentage points year over year to 51%. And then earnings per share down significantly, 49% year over year to 70 cents. So that's why you saw a higher PE ratio for the next 12 months because of, well, a hit on the earnings. Now we also have some more bad news of delays, of them cutting prices for chips. But before we jump into that, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Now, Stock Advisor has actually beat the market comfortably over the years. So all you have to do is go to fool.com/couchinvestor or go and check the links down in the description and in the pinned comment to get the best 10 stock picks now. So first things first, Intel is cutting Alder Lake CPU prices, Digitime reports. So Intel is cutting the prices of Alder Lake CPUs launched at the end of 2021 as order pull-ins from PC brands for second half of 2022 are far weaker than expected due to a deceleration in PC demands. And this is not just affecting Intel, this has affected the whole market, so AMD as well, and everybody's well aware of that. They've talked about that in the investor presentation, the Investors Day, so we're all well aware of that slowdown. Now, there's also a price target that has been lowered at Bank of America from $47 to $39. So the analyst there keeps an underperform rating on the shares. Semiconductor downturns happen every 3 to 4 years, and we could be due for another one. The analyst says tighter global monetary policy, geopolitical turmoil, and consumer weakness is likely to pressure chip demand in the second half of 2022 and 2023. However, unit weakness could be cushioned by richer non-consumer mix, robust pricing, expanding content, and constrained supply. He cut his 2022 semi-sales forecast to $608 billion and 2023 forecast to $604 billion. Now, I do want to mention that yes, it is true that these cycles happen 3 to 4 years, usually. But before, we didn't have such a big importance in data centers, and data centers really changed the game here. So it remains to be seen if those 3 to 4 year cycles still continue in the years to come. And then we had some news at the end of last month with regards to the Ohio chip factory. So Intel indefinitely delays Ohio chip factory groundbreaking over government subsidy gridlock. So they are waiting on that CHIPS Act to get approved. Well, the funding for $52 billion for the semiconductor companies. Now again, $52 billion might seem a lot, but when you think of it, Apple itself is investing much more, not even in the United States, but in China, which raises some questions, of course. But $52 billion, yes, might help companies like Intel, but to be honest, it should be much more than that, especially if the United States is serious about, well, dominating the semiconductor industry again and not relying on the Asian markets that much. And continuing on that story, Ohio governor says that Intel delay on $20 billion chip plant is about leverage. So basically, Pat saying that, well, they are now waiting until the CHIPS Act gets approved for them to continue their plans of, well, building that factory in Ohio is about leverage, basically putting pressure on Congress to pass that bill, which, to be honest, is a good strategy and might actually be proven correct. Now, just to be clear, Intel is still planning on building that factory in Ohio, but without that huge investment from the government, they're obviously not going to do this as fast, because remember, Intel is planning to spend around $100 billion in investment in the coming years. So with investments from the government, that should be moving much faster. Without it, well, much slower, because Intel is still a publicly traded company. They cannot just spend money around without thinking twice. And last thing here is another delay for the Sapphire Rapids. Not that a substantial one, but still another delay. Remember, these are the chips that should have been released at the end of 2021. Then it released a little bit in the first half of 2022 to select customers. And then it should have been released this summer, but now it's delayed again towards later on this year. Now, Sapphire Rapids are for the data centers, so it remains to be seen what happens there, but just another delay on that front. All right, so to conclude, I don't expect anything good coming from Q2. And for the full year, I'm actually expecting them to maybe cut guidance a little bit, and maybe that's why the stock price has been taking a bigger hit than usual, because, well, with everything that's just happening right now, it's not just going Intel's way. Yes, they are doing much better today than they were a couple of years ago. New products, better performing chips, new industries, new segments as well, with GPUs growing into that data center as well. Remains to be seen what happens with the Mobileye IPO, because do keep that in mind. But overall, if you're an Intel shareholders, very, very happy that they're still paying a nice dividend yield. So besides that, do share your thoughts down in the comments below. Are you buying more? Are you holding? Did you sell? Leave it all down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I see you all in the next video. Bye-bye.